Perseverance is not a long race. It's many short races, one after the other. Walter Elliot, my friends, each and every day, 10 to 15 minutes. That is all we ask. Let's jump into these charts and see what is happening. We see that stocks, bonds, gold are all up for the day. Bitcoin is the only downer. Let's look at where we are, the S&P 500. After 2 weeks of peaking, we can see that we now have a red spinning top. We were up for the day in the market, not much in the morning, popped up a little in the afternoon. Excuse me, 0.67%. We had some ranging in the morning. Not a lot of volume either. We see how the 2-day candle closed out. This is the Monday, Tuesday. It closed out as a red down candle. Didn't hit average volume there. 2 days into the week, and we don't have a lot of volume, not as compared to last week. So we'll see how this ends up. Are we going to have, after 2 peaking weeks with lots of volume last week and potentially an interim high, are we going to have a rollover? I can't tell you that yet. We're 2 days into a 5-day week. We will see as we approach Friday if we're going to be pulling the trigger on a short, on a down move. What would we pull the trigger on? Well, of course, it would be something like SH, which is our ProShares short. It is a short of the S&P 500, a single short. Now, do you know what inverse funds are all about? Maybe you do, maybe you don't. Maybe you like them, maybe you don't. Something you should practice trade if you're ever going to do them in real life. They have some ups and downs, and we have a great training I'll put at the end of today's show. I'm going to write that down right now. Inverse funds, how to make money when markets crash. You'll want to listen to that. So take a look at the end of today's video. Check out that video. Great training for you. Now, let's get back to the S&P. Again, we see some weakness here. Don't know if that's going to bear out by the end of the week. We really had a big down day on Monday and recovering some, a really big down candle on Monday in the morning. And then a recovery on Tuesday a little bit. Let's look at where we are with the NASDAQ. It recovered quite a bit. It was up 1.23% after that big down candle on Monday. But again, not a lot of volume sending it up. On the half day, we do have right there at average volume on the latest 2-day candle. You can see where that came from, primarily from the bump down on Monday. It is a red volume candle. Doesn't mean the volume was negative. Means that the candle, the 2-day candle on Monday opened lower than the prior close. When you see a green candle, it means it opened higher than the prior close. That's all that means. But it is helpful, and it gives us information. Look here on where the NASDAQ is. We had a lot of volume last week. We had, you could call it an interim high, not as high as the higher high all the way back in December, but it had gone down in the meantime. So, I say that's an interim high. That is not correct. 533.82, 531.52 is what we saw. So we had volume. We didn't have volume in the interim high. We had nice volume last week with a red spinning top. This week, as we look at it, we've got, maybe we'll get average volume by the end of the week, but another spinning top. And a big bump up on Tuesday. So I don't know where we're going to find ourselves at the end of the week. On the NASDAQ, it's the S&P where I'm thinking there could be a short position available. Let's keep going. We look at 20-year U.S. government bonds up through 0.31%. Again, we saw a bump down on Monday. Well, we saw things pulling back a little bit on Monday afternoon. Down on Tuesday morning, but popping up Tuesday afternoon. Didn't hit the average volume in the afternoon. Went over it in the morning. Volume's decent for the week so far. Look at that. Just through Tuesday, and we're getting, we're already over halfway toward average. And on that 2-day chart, now it is a green spinning top. We have some down movement on both those prior 2-day candles, but just continues to tick on up. Bonds just keep gaining some energy. So it's nice to see after that down play, a nice move up on bonds. We'll see how far that goes. Being long bonds, not a bad thing. What about gold? Man, gold popping up again. Almost 1% for the day. Up in the morning, A little bit further, it looks like up in the afternoon. Average volume in the morning. Look at that higher than average volume on these last 4 days. Gold just been hammering up. Look at that weekly candle, almost up to average volume already. We had well above average volume last week, so gold just taking off, blowing off that prior top. So you know what? We can get rid of that. We don't need it. We've gone past it, and gold just keeps on keeping on. That's beautiful to see. Now, what about Bitcoin? Well, Bitcoin's writing a different story. After it hit its high of highs back on the week beginning 16th of December, it was fiddling around, sort of going down, spinning tops into the green, popped up 2 weeks ago. Last week started dying on the vine. This week, red down candle, little wick on top. So it's not all down. Already up to average volume. Look at all the volume on the 2-day with it going down. And we see where we had the majority of that, like stocks, on Monday morning. And then it's just continued to trickle down since then, Monday afternoon, Tuesday morning. Tuesday afternoon, Bitcoin down 2.59% for the day. So again, Bitcoin pulling back. Hopefully in this pullback, it'll give us a nice setup to where we can wait for another rally and jump back into Bitcoin when it starts happening. That is where we are, folks, as we end the day. Don't forget, in today's video, we're going to have that inverse funds, how to make money when markets crash. You hadn't taken that, or if it's been a while, take it again, refresh yourself so you understand them, and you can take advantage. We really have 3 that we use: SH, PSQ, and TBF. That's for, in this order, the S&P 500, NASDAQ 100, 20-year U.S. government bonds. We don't have it for gold. Why? We don't have it for gold because ZDG is an inverse fund, but it's very illiquid, and we don't like illiquid funds because if you make a mistake and it goes against you, you're going to really get screwed because you go in already way down. Oh, and of course, as we told you yesterday on the show, you have a very liquid short on Bitcoin. If you think Bitcoin's going down, you want to ride a down move, check it out. That's only 6 cents apart on a $23 ETF. So that's something for you to practice trade too if you want to play the short on Bitcoin. Now again, it's the kind of thing you practice. We don't give market advice here. We're an education firm. We want you to practice. Practice makes perfect. I think the way it goes is perfect practice makes perfect. That's the way you get to Carnegie Hall. Practice. That's the way you get to immense wealth. Practicing doing the right things. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.